بسم الله الرحمن الرحيم. The questions. The first page for the accounting style questions. The first questions is choose. Number 1. The trial balance, the income statement, the balance sheet reports business profitability during a specified period. What is the statement which reports profitability? I'll have the profit or loss at the end of the year. Of course, the answer is the income statement. 2. The main components of the ledger, income statement, balance sheet are revenues and expenses. Also, the answer here is the income statement, which contains revenues and expenses. 3. Expenses, gain or loss, revenues include sales, service revenue, and commission earned. These are, of course, revenues, which include sales, service revenue, and commission earned, because all of these accounts are revenues. Number 4. Expenses, gain or loss, revenues include cost of sales, salaries, rent, and utilities. The answer here is expenses. Expenses, which include cost of sales, salaries, rent, and utilities. All of these accounts are expenses. 5. Assets, liabilities, owner's equity include cash, accounts receivable, machinery, and furniture. Cash, accounts receivable, machinery, and furniture. All of these accounts are assets. Of course, these accounts are assets. Number 6. Assets, liabilities, owner's equity are obligations. A company should pay for creditors. Of course, the answer here is liabilities. Number 7. Interest payable, interest receivable, equipment are obligation a company should pay to creditors. Any account has the word payable in it. The word payable means this is an obligation a company should pay to creditor. So the answer in number 7 is interest payable. 8. The difference between the value of assets and the value of liabilities is owner's equity, land, bank loan. The difference between the value of assets and the value of liabilities is owner's equity. Number 9. The temporary, permanent ledger accounts are not listed in the post-closing trial balance. Of course, the temporary accounts are not listed in the post-closing trial balance. Number 10. ETS company was incorporated on the 1st of January 2017. This means that ETS company was shared, established, closed in that date. The keyword here is incorporated. Incorporated means established. The answer here is established. Number 11. Utilities service administrative consists of water, electricity, and natural gas. Of course, water, electricity, and natural gas, these are some governmental services. So, these are utilities. The answer in number 11 is utilities. Number 12. Dividends, commission earned, accumulated depreciation have a debit balance. Of course, commission earned, this is revenue. Accumulated depreciation, the two accounts are credit, have a credit balance. So the answer in number 12 is dividends. When the company distribute some of the profits to the shareholders or for the shareholders. So dividends is considered a cost for the company. So dividends have a debit balance. Number 13. Prepaid insurance, unearned revenue, bank loan has a debit balance. Bank loan is a liability, so its balance is credit. Unearned revenue, this is an obligation for our company, so unearned revenue has a credit balance also. So prepaid insurance has a debit balance. The answer is prepaid insurance. Number 14. The electricity bill, which we didn't pay until the last of December, in 31 of December, is considered utilities payable, electricity expense, electricity paid. We have here the electricity bill, the electricity invoice. We didn't pay until the last day of the year. So this kind of obligation will be utilities payable. Utilities payable. I have to put it in the balance sheet in liabilities as an obligation to be paid the next year. Number 15. Journal entries, income statement, cash flow represent the financial transactions which have occurred in a specified accounting period. Journal entries, income statement, cash flow reports the financial transactions which have occurred in a specified accounting period. The answer is journal entries. Number 16. Journal entries are transferred to the ledger, trial balance, balance sheet. Of course, journal entries are transferred to the ledger accounts. The answer is ledger. Number 17, trial balance, ledger, balance sheet is a list of a business accounts. Of course, the answer here is trial balance. The trial balance is the list of business accounts. Number 18, trial balance, adjusting entries. Unadjusted trial balance is prepared before any adjustments. Trial balance, adjusting entries. Unadjusted trial balance is prepared before any adjustments. We didn't do any adjustments, so the answer here is unadjusted trial balance. Number 19, in journal entry, ledger, trial balance, the accountant will record each financial transaction with at least 2 accounts. Of course, each financial transaction will be recorded with at least 2 accounts. This is the journal entry, of course. Number 20. One of the parts of a recorded transaction must be debit and the other is contra account, credit, sundries. Of course, one account will be debit, the other account will be credit. The answer here is credit in number 20. Number 21, the total debit balances must equal the total credit balances in the ledger, income statement, trial balance. The answer here, we are talking here about the trial balance. The trial balance, in the trial balance, the total debit balances must equal the total credit balances. The answer is trial balance. Number 22. If there are any differences in the total of the trial balance, this means that there is an error, erase end in the recording process. Of course, the answer is error because the total of the trial balance must be equal. Any differences means there is an error or something wrong. Number 23, the trial balance, income statement, ledgers equality doesn't mean that all transactions were correctly recorded. The answer is the trial balance. Number 24, journal entries, adjusting entries, 31 of December entries are made to be sure that all recorded accounts belong to this accounting period. Journal entries, adjusting entries, the last day of the year, the day of 31 of December entries are made to be sure that all recorded amounts belong to this account period. Of course, this or the answer here is adjusting entries. Adjusting entries. Number 25. Accruals, cash, prepaid. These are revenues and expenses recorded but not yet received or paid. We record revenues and expenses, but not yet take the money or pay the money? Of course, the answer is accruals. 26. Expenses paid in advance are considered prepayments, accruals, advanced. The answer is prepayments. Number 27. Revenues received in advance are considered obligations. Right? Prepayments. The answer here, prepayments, because revenues received in advance. So the answer is prepayments. Number 28. Depreciation, expense, and allowances for doubtful debts are considered non-cash, cash, paid in cash. Of course, depreciation, expense, and allowances for doubtful debts are considered non-cash. Number 29. Trial balance, unadjusted trial balance, adjusted trial balance is created after the preparation of adjusting entries. Trial balance, unadjusted trial balance, adjusted trial balance is created after the preparation of adjusting entries. Of course, the answer is adjusted trial balance, because we prepare the adjusted trial balance after the preparation of adjusting entries. Number 30. Adjusting entries, unadjusted trial balance. Adjusted trial balance is used to prepare income statement and the balance sheet. The answer is the adjusted trial balance. Number 31. Closing entries are adjusting entries, journal entries, adjusted trial balance. Closing entries are adjusting entries, journal entries, or adjusted trial balance. Of course, closing entries are journal entries. The answer is journal entries made at the end of an accounting period to close temporary accounts. So we prepare or make the closing entries which are journal entries made at the end of the accounting period to close temporary accounts. Number 32. Temporary accounts include cash revenues, accounts receivable. Of course, revenues are temporary accounts, so the answer is revenues. Number 33. The statement of accounting financial balance position is another name for the balance sheet. The answer is financial position. The statement of financial position is another name for the balance sheet. Number 34. In accrual method, cash method, posting method, the accountant doesn't record any transaction unless there is a cash inflow or outflow. The answer here is in cash method. In cash method. Number 35. The process of recording in journal, posting to ledger, preparing the trial balance, and the final statements is called accounting period, accounting cycle, financial statements. The answer is accounting cycle. Number 36. The word receivable refers to customers, creditors, company workers. The word receivable refers to customers, and the word payable refers to creditors. The answer here is customers. Number 37. Sales expenses, prepaid expenses, expenses payable are obligation on the business, should be paid the next accounting period. The answer is expenses payable. The answer is expenses payable. Number 38. The company should prepare financial statements on cash accrual periodic basis. Of course, the answer is periodic. Number 39. Unearned revenue, prepaid tax expense, prepaid insurance is an obligation on our company. The answer is unearned revenue. Unearned revenue is an obligation on our company. Number 40. Prepaid tax expense. Wages payable. Unearned revenue is an obligation, but it was received in advance. The answer is also unearned revenue is an obligation, but it was received in advance. We didn't give the customers the goods or service we supposed to give to them. Number 41. Tax payable, tax expense, commission expense is a balance sheet account. Tax expense and the commission expense, these are expenses. So these accounts belong to the income statement. But tax payable is a balance sheet account. The answer is tax payable. Number 42. Drawings are a temporary permanent expense account. Of course, the temporary accounts are revenues, expenses, and drawings. So the choice here is temporary. The answer is temporary.